Avenue. The euro versus US dollar held this support again at 38.2% retracement around the 143.22 level. The low actually came in at 143. What level is that? 143.24, and then bounced off of that low. This was a nice signal for those people who were short to either take profit, or those people who wanted to go long to buy the euro, and they've purchased the euro back up to where it currently stands at the 143.77 level. On the top side, we'll be looking for the underside of this trend line. That level currently comes in at around the 140, let's call it 144 level, and that also corresponds near the highs for the day. High for the day came in around the oh 07 level, a number of different highs in that vicinity between 144 and 144.07. So that's the target on the upside if this momentum is to continue. Taking a look at the 5-minute chart, you can see the non-trending nature of the market here. We are back above the 38.2, or the 38.2 and the 100 and 200 bar moving average. The midpoint of the range of the Friday's low or high to low trading range, which has been the consolidation range over the last 2.5 or so days, comes in at the 143.80 level, and that's where the market seems to be finding some sellers as well. So not only do we have resistance at the 80 level, resistance at that 143, that 143.90 level off of the hourly chart. Where is it? We're right up at this point, 144 level, and then resistance at 144.06. That's how I play the euro versus US dollar. On the downside, break through the 100 and 200 bar moving average, and you should see a rotation back to the downside as the market tries to find its way, find its direction. Let's take a look at the sterling versus US dollar. I'm going to go to the hourly chart here, and off the hourly chart we continue to have this bull flag, if you will, sharp move to the upside, flag formation here. 38.2% retracement has held at the 162.56 level. We tried to move above the level here a couple of times, but each of the time those moves failed. The current level comes in at the 162.97. We break above that level, and we'll need to move back above this old trend line here, connecting these highs. This parallel trend line also above these highs that we saw earlier today. Those will be confirmations of this bull flag taking effect. We do need momentum to cause a bull flag to move forward, and we need the price going higher. If the price cannot get above the old high like it did here, or extend the high like it did at this point right here, it's likely to fail and move back within the channel here, in which case the bull flag kind of loses its luster, doesn't it? Let's take a look at the dollar versus yen next, and this currency pair made a new low here at the 78.05 level. Since that time, the market has moved back to the upside. If I put some levels in here, let's see if we have a parallel trend line that we can define off of our highs here, and not really at all. But let's see. Maybe something like that is what the market is focusing on, why we're finding some resistance at this level. I'm going to take this trend line out. It's kind of losing some of its importance here. But if you connect these highs here, we have 1, 2, 3, 4 different highs that come near this trend line. This current trend line comes in around the 78.42 level, and that's the level that I'm going to focus on instead of that previous line. Watch the 38.2 as the next target after a move above this trend line should the market get above that level. On the downside, I still like this level where the market is currently at. This level has a number of different lows at the 27 level, and the market dipped just below it here in the last hour, first time in the last 3 hours, maybe showing that the market has more momentum to the downside now that the correction seems to be over, founding some resistance against that top trend line. Let's take a look at the dollar versus Swiss franc, and this currency pair extended beyond the top and bottom trend line here, and that moved to new lows, as a matter of fact, but those lows, you can see we're seeing a rebound back up. We are finding some resistance against the 80.76 level. That was the old low going back to, July 14th, and the inability to get above that level keeps the bearish bias here intact. We'll put a horizontal line across that level to remind us of the importance of that level. I have this other trend line here. This trend line again is just a parallel trend line connecting these highs at the top and lows at the bottom here, and it has some significance, but I'd be more inclined to think that this level at the 80.76 is more important for the trade as we head into the afternoon. The dollar versus Canada continues to hold support against this old trend line. You can see how the market had these parallel trend lines in here, moved above and moved higher, and then found support against that level. Not much action that we've seen in the dollar versus Canada since making the lows here. Some consolidation at lower levels. Some of the slope has gone out of the steepness of this curve. Yet we remain below the 100 bar moving average, below the 38.2% retracement of this move to the downside. So watch the 100 bar moving average, see if the market can go and test either by having the moving average move down or the price move higher, and that will be a key test for the market to be able, if it can stay below that 100 bar moving average on the 5-minute chart. If it can, this bias remains to the downside. Already the bias is to the downside. This is still a trend move to the downside here that we've seen in today's trading. Not much in the way of a corrective move, sharp move to the downside, narrow correction to the upside, another move to the downside, and very narrow correction to the upside. So there you have it. Look at some of the major currency pairs. My name is Greg Michalowski for FXDD.